Good evening, everyone. My name is Celeste Chand. I'm a chartered accountant in public practice, and today we'll be talking for about one hour to 1.5 hours, depending on the feedback we get from you guys. So this is a pretty casual presentation, so feel free to type in your questions, and we'll try and answer them as we go, or we'll stay around towards the end and answer the questions for you. So just a quick background on me, who I am. So like I said, I'm a chartered accountant in public practice. I'm also an active property investor, so I buy and hold investment properties. I trade properties and I develop sites as well, and I invest in cash flow positive properties. Buy and hold pretty much means renting out properties for long term. And the kind of properties I buy and hold are properties with big sections at the back because I like to bank on land. I'm a partner here at GRA. I've been partner for the last 12, 13 years. And I've also got experience in property accounting and business accounting for the last 16 or 17 years. Um, Currently, in our whole portfolio, we have 51 properties. These are all our whole properties, and they're rented for on long-term tenancies. And again, they're properties with big sections because we like to bank properties with large sections so we can build on it later, or we can probably move houses on them. So also today I've got two of my good mates joining in, Then and Maggie. They're both amazing property investors. They're quite informative. They understand property investing. They understand what you need to look for and all of that. They do project management, provide you due diligence and all of that. I use Maggie and Then every day. They're quite smart. So and they're very informative people. So you'll hear them talk about their stories and how they got into investing and how they help clients achieve their dreams in terms of property investing. Now, before I proceed any further, I just want to make it clear that I'm not a financial advisor, and none of us, Maggie or Then, are financial advisors. We are chartered accountants, and our job is to obviously give you chartered accounting advice or accounting advice or business advice. So if you can just read that, I'll give you about 10 seconds. And if you got any questions about financial advice, please feel free to email us. A bit of background about GRA and who we are and what do we do. We are chartered accounting practice in Newmarket. We provide all sorts of accounting services. That's your bookkeeping, your GST returns, your Xero services, your tax returns, your financials, banking letters. If you're doing tenders on jobs, we help you with that. So we are quite uh, a large firm that's got a range of services. We also do asset protection. Now, asset protection is quite a specialist area. This is where these are basically accountants slash lawyers working together to form structures to ensure your assets are protected. Now, when we refer to asset protection, we're talking about protecting your family home, your businesses, because you want to protect your business as well, to ensure that if something goes wrong, your assets are protected. We also help you with insolvency work. So if you're insolvent, you need help with liquidation, or you're thinking of going bankrupt, maybe you can talk to us and we can help you with that kind of stuff. Or maybe we can just help you negotiate a settlement position with your creditors. We also give you tax advice and tax planning. So this is where basically we look at your structures and we look at things that we can do to protect you more in terms of tax savings, and protect you from any other creditors like IRD. We also form trusts. That's one of our main core specialists, is forming trusts and providing with professional trustee services. Now, professional trustee means people, basically young families who, if something happens to them, no one's there to look after their kids. They normally appoint a professional trustee, so we can provide that service as well. And we do property investment and education as well. So basically, you can see on our right here, we got property school and property development school. That's one of our products, or where we promote you into investing into properties as well. So, we don't promote you; we guide you through into property investing, and we provide you all the knowledge that you need in terms of becoming a property investor. So, GRA is accounting firm. We are quite a well-trained accounting firm. There's a few hundred years of experience here. All the partners here and all the staff here are senior staff. So we spend a lot of time learning about properties, learning about accounting, learning about businesses and tax planning. Now, market update, just to give you a quick update out there. Now, a lot of people are saying there's lots of discounted properties. Yes, there are discounted properties, but they're hard to find. So it's really important that if you do see a discount properties, you try and get it under contract as soon as possible. We are seeing some good opportunities out there. Basically, land that was selling for about 2.5, 3 million in Auckland are now all selling for about 1.6, 1.8 million. We've also noticed that interest rates have peaked. What we're seeing is long-term interest rates are coming down. Earlier this week we had SBS dropping their interest rates. I use main tier lenders, and all are dropping their 3, 4, and 5 year rates at the moment. So I think interest rates have peaked. They're about to 10, and they're going to come down. What we're noticing in the market is there's massive demand for housing. Now, in terms of normal tenants, so your normal tenants, mum and dad tenants out there, and your social housing demand as well. There's a major, major pressure on social housing demand. And I've been talking to people who are looking for rental properties, and they said to me it's quite hard to actually get a property at the moment to rent. And every time there's an open home for a rental property, there's people lined up to go through it. And also there's a huge shortage of rentals everywhere. This is throughout Auckland, in the regions, and everywhere else. So demand versus supply. So basically, it's in favor of investors at the moment in terms of if you're renting houses, you can actually ask for increased rent. And the reason the rent has gone through the roof or has increased significantly is because the cost of providing houses have become expensive. Your rates are up nearly 25%. Your insurance are up nearly 30, 40%. Your interest rate is up 200%. So, and I'm quite surprised that, people out there thinking their rent should come down. Well, I don't know how, because the cost of providing houses are through the roof. Um, Also, we've got national government in now, National um, Act and NZ Fest. Now they've all come in, and basically the tax rules are changing back in favor of the landlords, which is what it should be, because all the other businesses are allowed to claim interest. So it's unfair that landlords are not allowed to claim interest as well. And the tenancy changes as well. Now you can obviously kick your tenant out if they're misbehaving. They're not listening to you or not looking after property. You can give them notice and shift them out. So those are some of the favorable changes that are coming for investors as well. Now, what I'm going to do is throughout the presentation, I'll show you examples of what we're doing, so you understand we just don't, talk the talk. We actually walk the talk here. So this is a recent trade we're doing. We bought it in November 2023. We are renovating to sell, so it's a cross-lease property. We paid $526,000. You can see the photo up there, and you can see some of the inside, what it looked like. So we've done renovation about 175. We've got transaction costs about 8 grand. Interest cost is about, plus the agent's cost is about 46. Market value is between 875 to 900K. Our pre-tax profit is 100 to 121 grand. Now, you might say it's not a lot of money, but hey, we like to trade. We like to keep our traders busy. And every opportunity we get to trade, we actually hunt for properties. Now, what you're going to see is photos. These are before photos, and you're going to see what we've done to the property now. So these are now photos, seeing what the property looks like. And that's basically what 175,000 does to a house. You renovate it, you change all the windows, we double glazed everything, beautiful toilet and bathroom. So basically you can see here what the bathroom looks like now. So this is what, 175,000 gets you. It's pretty much a brand new house that obviously someone will buy and live in. Now, one of our recent haul, we bought it in November 2023 as well. So you can see down here, it's the one marked with red. We purchased for 1.3 million. We renovated, did a little bit of renovation for about 20 grand. Total cost was 1.32 million. We've got 2 dwellings. You can see there's 2 dwellings here, and it's a subdividable site, so we can subdivide it. We've now rented it to social housing at $2,500 a week. Now, the reason the rent is 2,500 a week, because this is more of a specialist home for disability tenants. So once you list this property out, the tenants stay there for years and years and years, and the house is customized to meet their needs. You can also see our neighbors. They've recently subdivided. So basically, on 2,000 square meters, they've subdivided into 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sections. So that's the opportunity we have long term as well, to obviously remove the house and subdivide, which we're not going to do because we like to keep them as our long term holes. So we want to show you not only that we are trading, we are buying houses as well, and keeping them long term. Now, this is one of our recent development sites, so we're working on it at the moment. We're building 3 high-end houses, and this is in a really good street in Mount Roskill. Now, land and subdivision has cost us circa $1.8 million. The building cost is $2 million, so our total cost is $3.8 million. The market value is between $4.8 to $5 million for the 3 houses. So our pre-tax profit is about $1 million. So that's what it is. Now, the beauty about this site here is we're building 3 high-end houses, and normally on a site this big, you get eight to 10 houses. So these are not townhouses, these are high-end houses. So you can see that we are trading, we are holding, and we're developing sites as well. So, we actually walk the talk here. We do all things that makes you money in properties. And I love doing sites like this because if anything goes wrong, we've got the money or funds to control it. Whereas if you do a larger site like a 20 or $30 million project, if anything goes wrong, your cost is more. So why property? Why are we thinking about property? Why are you sitting here listening to me and all of that? Why am I promoting property as well? I think the reason we are all here is because we all are looking for financial freedom, right? We want more time to spend with our family and our children, our grandchildren, and things like that. I basically could have retired at 30, so I've turned 40 this year. So I could have retired 10 years ago. And the reason I haven't retired is because I like what I do. I promote properties, I've built a portfolio, and I'm looking at building my portfolio bigger and bigger over time. It's just I love doing it. So basically, this is some of the questions we ask you. So why do you want to do property investing and how you can set up yourself financially? How much do you need? Like what do you need in terms of property investing to keep you going? So you might say, okay, we live in Auckland, we need a house, we need a badge, we need two nice cars, and we need 200 grand a year passive income. So that's what you probably need. So we look at investing about $4 to $5 million instantly to buy a family home, a batch, and two cars. That's if you're in Auckland, and to have a passive income of about 200, you need about $7 or $8 million of assets invested. Um, so those are some of the things you have to think about. Well, how much do you need? How long before you retire? Some people have basically 7 or 10 years of working life left. Some people have 5 years. Some people have 20 years, right? I personally think if you invest correctly to, I'd say between 7 to 10 years, you can create a portfolio that you can retire on. Now, I've built my proper portfolio within 7 to 10 years, and I'll show you what they are in a sec. Maggie and Then will show you their portfolios. They've built them in the range of between 7 to 10 years, and they've created a portfolio they can retire on. And some of the other questions we ask you, what assets do you have? Maybe you do have enough assets, and you need to just reconfigure them. Maybe sell your expensive house and buy a cheaper family home and invest the rest of the money into properties. What debt do you have? You might have too much debt. So we'll get you to work harder and reduce your debt level down so you can focus on investing. Or maybe you don't have any debt level. And do you have enough? Maybe you do have enough and you don't need to do anything. Or maybe you need to just sell something down or buy something else that provides you with more cash flow. But these are some of the questions to get you thinking about financial freedom. Now, can you save for retirement? Retirement is basically, you're going into retirement, you're not going to work anymore. So let's say you're 45 years old, your target of $2 million in savings, that's your target. So when you turn 65 years old, you want to have 2 million cash in the bank. So you have 20 years to save that. Now you need to save 100 grand each year to obviously end up with $2 million in 20 years. So you basically need to earn roughly $250,000 a year. So you can see over here, if you're earning $250,000, you pay PAYE of 74K, you have living expenses 76,000, and you save $100,000. Now, what I can tell you, because of obviously I worked on thousands of tax returns over the years, something I've noticed is when people earn 50,000, they spend 50,000. When people earn 100,000, they spend 100,000. When people earn 250, they spend 250. When people earn $1 million, they spend $1 million in their lifestyle, right? It just happens. I think it's just the Kiwi nature, right? We like to spend what we earn. So it would be impossible for this guy to save 100 grand a year because what's going to happen is in his fourth year, he's going to start feeling sorry for himself because he'll have 400 grand in the bank account and he thinks he can go and buy a car and go on holiday and obviously use his money because he's feeling sorry for himself and he wants to reward himself. So it's hard to save money. It's really hard to save money. That's the whole point of this slide here. Now, if you do property investments correctly, right, and you do things properly, you can end up buying basically for less than the market value. I made my money into properties by buying it for less than real market value. I believe that's how you make money is on the day you buy the property, right? You've bought it for less than market value. You've got instant equity. Now you're going to do up the property and put it back on the market, or you're going to refinance it so you can grab the initial capital out. And also, if you're keeping for long term, what I've noticed is with all my clients who do long term investing, the more properties they hold, right, over the years, the more and more properties they hold, the equity grows up. So that's basically keeping properties for long term. Um, and also the beauty about property investing is if you're renting or leasing, obviously you get rental income every week, and that helps with your cash flow. Like in my portfolio, I get about $7,000 a day in rent. That's a day. We get paid rent. Every day we get $7,000 a day in rent. And that's currently in my portfolio. So every day you wake up, there's another 7,000 that's coming. There's another 7,000 that comes in the following day. Um, and if you do improvement, repairs or renovation to your house, obviously you can refinance and use the equity to buy more houses. And look, if you basically improve a property, increase the value of the property by $150,000, that's a lot of money. To earn $150,000, you've got to earn $300,000, pay your GST and income tax to bank $150,000 because half your money goes into tax, right? So when you're renovating a house and renting it out long term and you add $150,000 value to the house, that's a non-taxable income because you've added value, right? So that's you look at the real picture to earn 150, you got to earn $300,000. So that's the beauty of property investing because you can grow your wealth, grow your equity over time, and keep refinancing and using it to buy more and more houses. Passive income is where you have, properties giving you surplus cash. And so every week you get surplus cash in the bank account. That's what my portfolio does at the moment. We get passive cash flow every month. Active is basically where you buy to trade properties and you sell them for higher price. Like if you do passive investing, right, which is one of the things that I do, you accumulate the right properties at the right price. Always said to you that you make your money on the day you buy the properties. And when you have enough properties, you don't need to work. And like I've said it earlier, it only takes good 7 to 10 years to actually come up with the right property portfolio that you can continue renting out. Um, and if you do long-term quality investments, they actually go up in value. They increase quite a bit. So long-term quality investments are basically, properties with big sections that people can subdivide and build new houses. And anyone knows that if you're in Auckland City or any part of the world where you're in a city, the value goes up. Now, I actually think the value of properties around the whole country will go up because the cost of building is so high. Actually, it's cheaper to build houses in Auckland compared to out of Auckland. I just can't believe the cost of building out of Auckland. It's just, they're easily starting at about $5,000 a square meter. And also, if you do property investing properly, which is passive investing, it creates intergenerational wealth, which you can pass on to your kids as well. So not only you pass it on to your kids, you can pass it on to your grandkids, and everyone gets to enjoy the wealth with you. Now, this is a passive income example of a property we bought. Now, I'm going to show you examples throughout so you can read and understand the kind of properties we chase. Now, this is a property with a rear house at the back and a front house in the front. We bought the house for $707,000. We renovated for $40,000, which was subdivision and a little bit of work. Settlement cost was about $2,000. Our total cost was $749. Our projected market value is $1.1 million at the time when we did it. Instantly, we created a $351,000 equity. Now, I can tell you, we refinanced, we got our equity out, and we bought 5 more properties using this 351,000. So our instant equity was $32,000. Now, for anyone to earn $351,000, you've got to earn 700 grand, pay your GST, pay your income tax, then you end up with $351,000. So that's the beauty of doing passive income by adding a little bit of work on the property, 40, 50 grand, and it refinances at a higher rate, or the values come back at a higher rate. So our rent at the moment is about $1,100, so we get $57,000 a year. After our operating expenses of $7,500, we bank $50,000. Now we were lucky enough, we booked this at 2.5%, so we've been paying it off as fast as we can. It's currently doing $31,000 a year cash flow positive. Now, whatever we're getting cash flow positive, we are using that to reduce the debt level down because we don't need the money. So we are hammering the debt level down as fast as we can. So yeah, like I said, it's doing $31,000 a year cash flow positive at the moment. Now, this is the kind of properties I chase everywhere. If I see properties with dual income, because you got 2 income coming in, instead of buying a property with the big empty sections at the back, a second dwelling is even better because it adds more cash flow. Now, active investment is basically where you renovate worn out properties and you sell it for profit. So this is where you do up and you sell properties for profit. You fix houses with issues like unconsented work. You reclaim leaky houses, which we've done, and it's actually not easy. So be careful if you're doing leaky houses. And then you sell it once it's finished. You rebuild rundown houses or build new ones. So basically, if you're going to renovate the rundown house or build new houses on site, that's what active investment is about, where you're building and to sell it for profit. And normally, profits from active investing is used to boost your progress. So either to buy more trading stock or to use as deposit for passive investing. Now, this is a property we bought in Henderson Valley Road, and it's basically one we bought and sold for profit. It was under one title, so both properties were on the same title. We paid 1.810 million for, sorry, we sold it for 1.8 million. We've ended up buying the property for 1.3750. We spent about $50,000 on renovation, 21,000 marketing, transaction cost was about 8, settlement cost was 5. So all up, we spent $41,000 in interest as well. So our total cost was 1,495. Our profit before GST and tax was $314,000. Now this property here took us circa, I would say probably about good 3 months from start to finish, getting a subdivision on selling it for the profit. So we ended up banking $267,000 after GST. And obviously, we had to pay tax on the profit as well. Now, Maggie will talk about her portfolio investing and what she's done and how she's achieved her property portfolio investing. Now, guys, Maggie is very smart, very informative. So you look at what she's done. You know, she's done quite well. She started with next to nothing on this, and she's built quite a nice empire now. So watch what she has to present. I'll let you take
Thanks,
over.
Alish. A little empire, just a little miniature one. So we started off with getting really good property education, and the right advice is it really helps you get going and avoids mistakes that are not only costly in terms of money, but very costly in terms of time. So with two ordinary incomes, just ordinary bank borrowing, there were at the start, we had one $430,000 rental property and secured a $300,000 revolving credit facility against that. And early on, we did an occasional active trade, so a renovation that was sold, and then the profit was put back into the hold portfolio. But there was only 3 or 4 of those, so very sort of low level active trading in there, pretty hands-on in terms of doing renovations and managing the properties ourselves to save money. And initially, it took an initial portfolio of 4 properties. We purchased in 8 months. So these are all in South Auckland. There's a very small 2-bedroom unit. You can see the figures there. Not typically the type of property you would purchase unless it was particularly cheap, but it came bundled together with the second property, which is one we really wanted, this one, house and granny flat, that was earning $585,000 per week rent at the time that we purchased it, and spent about $60,000 doing a renovation. So we're looking at surplus on both those properties. So this is after principal and interest loan repayments. And you can see the increases in rent from the time of purchase to current. A few months later in May, purchased a third property, a house and a consented sleep out, spent a little bit of money there, increased the rent from $650, and that one produces a really nice annual surplus while paying off debt over 25 years as well. And then a few months later in August, purchased another house and consented sleep out, spent a little bit of money on it initially, and increased the rent up to $740 per week. That one unfortunately produced a negative result on an annual basis while paying off debt. But overall, the portfolio was still cash flow positive, the 4 of them. The house and granny flat, after the renovation, so later that year in 2015, generated a $270,000 equity gain and a $255 per week rent increase. Similarly, the other property, $230,000 equity gain on purchase and $300 per week rent increase almost immediately. So very quickly, we were able to repay that original $300,000 revolving credit facility. So it left that little portfolio completely financed, including covering the renovation costs. it looked after itself. There was enough rental income coming in to pay for all the costs and upgrades. So that rental income grew to 180,000 per year, and just over 8,000 left over after paying off loan principal. So it covered repairs and vacancies and so forth. That debt was initially borrowed for 25 years. So 25 years from starting, even if there's no extra money added in, it'll all be paid off. We never went very quickly from starting with that initial rental property, living with flatmates. There's the 4 that were purchased in 2015. 2 years later, purchased another property with 2 dwellings on it. So there's your multiple income streams that Celeste was talking about. 2 years later, purchased a property with 3 rentals on it, 3 houses on it. 2 years later, sold the original house, sold the property that produced that negative result, paid off the little 2-bedroom unit, and paid off the property with 3 houses on it, purchased a home with land at the end of that year, and 2 years later, we're added 3 income streams to that and are in the process of adding another 3. So not a huge purchasing rate, purchasing a property basically every 2 years after that initial portfolio. One of the things we do is go through and improve the properties to get massive increase in the rent. So this is a very ugly and very dated house, but spending 50,000, which repainted the inside, replaced vanities, new curtains, basically refurbished it, but not a complete renovation. It's still got the original kitchen, but definitely improved and much pleasanter inside with new flooring, new paint, new curtains. Produced a $450 per week rent increase. It is quite a large house, so there's about 6 bedrooms in there and multiple living spaces. The second example there, while it looks very neat and tidy on the outside, it had suffered with careless tenants on the inside. So we probably spent 50 to 60,000 on a full renovation. It's new kitchens, new bathrooms, new paint, curtains, carpet inside. But some of that money was then recouped through insurance claims, but produced a $250 per week rental increase. So looking at good returns on the money invested. So 9 years from starting, within the time frame that Celeste was talking about earlier, 7 to 10 years, approaching 5 million equity, so up from 430 at the start. All of the rentals have potential to add dwellings, apart from that little 2-bedroom unit, obviously. There's sections to add dwellings to, so we have room for up to 14 additional rental income streams on land. For 350,000 a year rental income, so that's up from 22,000 at the start. We're in the process of increasing rents, doing some improvements, so again, that's another $30,000 jump in rental income. Could have a small debt-free portfolio now, or just wait out that time frame, and we'll be sitting on at least 400,000 come retirement age. So over to you then.
Yeah, thank you. Well done, Maggie. So my journey started, for property is back in 2015. I'll share my timeline and how I started, but it started from active trading, so buying properties where that's run down, renovating for a profit, and that's how I started. I didn't go buying a home or anything else at first. It was just going out there, creating that capital so that I could, or working money so that I could go and buy great properties for passive income. So that's my journey and that's how it started. So active trading, some of the examples of active trading, which Celeste shared one earlier, but here's one that I was involved in, and this was in Bridgeley Rise in Goodwin Heights. So this is a large 2-bedroom house. So we went through, looked at the layout and see that they could be converted into a 4-bedroom house, and needed an upgrade. So as you can see, the before and after photo of the outside of the property, the kitchen. That's how it looks like from the inside. Very well used, undated. That's the new kitchen. That's the living. So was a full renovation. And so just to give you a bit of numbers of, what can be achieved in the market, when you get it right, that property we bought for 824,500, so 824,500. We spent just under 100,000 in renovation. The marketing fee here is referring to the real estate agency for selling the property. The transactional costs, that lawyers, interest, and settlement costs all up, including the purchase price, worked out to be 975,616. And this took us 4 months from purchasing, renovating, and selling the property. So we ended up selling it for 1,170 at the open market at auction. And we had a profit of 167,119 before tax. So these are also the deals that we are always actively looking and to get involved. But it is hard work. It's not like the first property or the second property that you see. But with practice and time and the right network, you are able to achieve those. So my journey started, as a sales rep back in 2015, and I had an 80K salary. But for me, what else? If I was hit by a bus or if something was to happen, I could easily be replaced, but there's nothing else to fall back on. And property is something that have an interest, research, and it was a common area where people were setting themselves up for the future. So I attended a seminar, but I did not know anything about property in the sense of investing. So I needed the education. So I signed up for a mentoring program and got involved in learning the business of property. At that time, I was fortunate enough I had access to 50K saving and 130K a revolving credit facility from our family. So that was my starting point. So 2015, did my first deal. And for me, that was the going through the education, seeing other people doing the transaction, but having to do it for yourself and having the profit sit in your bank account was the real, aha moment, because it's real. You could see it, it's your money. And for me, that time it was like, okay, great, I've done one deal, that's fantastic, but I need to get better at this. What do I need to do? So further education. And from the next year, what I did myself while working full time is set myself a target of one every quarter, because life is busy and I wanted to be realistic and not beat myself. So went down to did that and made 200K in profit. So the next thing is, okay, great, the system works. I just need to do more deals. So I resigned from that particular job and then went out to do, going out to do more deals. So for me, the thing here there was getting better at the numbers, but also the money that I was making through property trading is that I was reinvesting into the right property. As you can see, in 2016 is when I bought my first home, and then the rental property. Along the journey, went out to do more deals. Back in then 2020, second rental property, third rental properties. Along that with coaching, teaching clients how to, pretty much what I've learned throughout the journey and sharing that so that others can achieve the same result. And because that was crucial for me, because I was attending seminars, but I didn't know the know-how or the confidence because I missed the education. So that's where I got into the details of how to do it. But more importantly is the property that I bought for long-term hold, like this one here, which was the first property that I bought. So that was the front house, which was run down, and the rear was a nice, property that someone can move into as a renter. So what I did was went in, bought this whole section as a home and income, renovated the front property because I knew the art, how to run a renovation, and because I was already doing it to sell. So I did that for myself, moved into the property, rented the back. While I was there, had a chat to the neighbors, and they said, hey, if you're ever looking to sell, give me a knock on the door. We could probably save you some on agent money, and you could probably pass on some savings to me. Ended up buying the neighbor, and now I'm looking at buying the rear, because the ideal goal is that this is in Newland, and it's in a zone where I can build a bigger portfolio with, through development of like six units. That will be my future retirement plan. Along with that, the family home, which is also with an eye of a property trade I went to buy. Initially, went there to renovate to sell, but then run through the numbers, and it was a great family home, so we decided to keep it. Early in the transaction, we said, hey, we could live in here, so we didn't want to trade this property. And then this is another property that we bought in Sparona in South Auckland. that was, I could remove that existing house or move the other existing house, build 3 new houses or put a duplex there. But the future plan for me with that one that you see here with number one is to do something like this. So we have 6 um, townhouses there that will be giving income through. So I've got the feasibility studies, everything done. It's just do it when the time is right. To share with the numbers of the family home, this was purchased at 965, did a renovation of 185,000. The current CV is 1.6, probably could sell for 1.4 in the current market. So I've got a 250K worth of equity. I could go there and sell it, cash that in, but I'm just gonna sit on it, live in it, and go to the bank on paper, use that money to go and buy the next property. So that's the great thing about property investing is that understanding how it works, understanding the numbers, so that you can make the right decision. And just like Maggie, myself, and Salish, we all made, so that you can continue to grow your wealth.
Thank you, Than. Guys, now I'm going to talk about things that I do. And obviously, I use Maggie and Than every day for help with my portfolio. So I have them available to me all the time. And I also use like town planners and all those guys to give me a hand with property investing. So you can see here me with my my nice photo. And there's a site in Mount Roskill we're actually developing at the moment. Those are the 3 high-end houses I was talking about. So I'll just give you a quick background where I've started now. What do you got to remember? Maggie, Than, and I were not born into money, right? We didn't well, we were not born into money. We were just out there, roaming around, just normal graduates or mum and dad investors like Maggie and her partner or Than, looking for opportunity. So I started work here at GRA in 2007. So I had a graduate role. Basically, I used to sit here and do data entry and GST returns for clients. Back then, the clients would come in with a shoebox, dump it on you, and walk away. Now, I still have my old calculator that sits here, and I'll see if you can hear the noise. I don't know if you can hear that noise. Those numbers, I used to push through those calculator, and I used to hear those noise click all the time. That's how I understood numbers. And I used to learn about numbers by physically entering and seeing what clients were doing. And so I was pretty broke, with 47K of debt. This is in 2007. So I had a $30,000 student loan. I borrowed $15,000 to buy a black Ford Falcon because I'm from out west, so everyone drives a black Ford Falcon. And to make it even better, I borrowed another $1,000 to put some mag wheels on. True story, right? This is what I did. I was 47K negative, right? And I had 50K of now I have 50K of property growth every month. Every month I make $50,000 of property minimum. Right? I can tell you this now, for the last 5 years, I've been making between 100 to 150 grand a month. That's what I make every month in property investing. Now, I'm not any sort of gurus or anything like that, but I'll show you what I do. So basically in 2007, I had 47K worth of debt, like I've explained to you, 30,000 student loan, $16,000 for a car, and $1,000 for a mig bill. Right? I bought my first property in 2010. So from 2007 to 2010, I was busy doing data entries, watching all my clients do investments and things like that. 2010, I bought my first property, right? And at that point, I do remember I'm going, well, eventually I want more properties, right? And today in 2024, I have over $44 million in property portfolio. Now, this is interesting because I did the numbers today. We have $44 million of hold properties in our portfolio, plus we have $10 million of properties we're developing to sell. So all up, we got 54 million in the portfolio at the moment that we're developing to sell, right? So actually, the portfolio is sitting at $54 million. And funnily enough, in the weekend, I was thinking to myself, what am I going to do, in the next 10 years? Because I feel like I've achieved what I want. I can buy any cars or anything I want now. Money is no longer an issue in terms of property investing and things like that. I like coming to work because I get to see my mates like Maggie, Than, all my other mates. So everyone's my friend. My clients are my friends as well, right? So what do I want to do next? So my journey for the next 10 years, I've decided, and I decided this in the weekend, that we're going to get up to $100 million of properties with me and my mates. We're going to push it up to $100 million. And we're going to chase it. We are chasing it now. So we've already put 3 offers in this week. to buy properties as well. And what I'm doing is between me and my mates, we're going to go out and we hunt properties. And Than and Maggie gives me a lot of hand as well. So I usually get asked the question, when is the right time to invest in properties? It's never. Every time I've bought a property, I thought to myself, shit, that's expensive. That's expensive. But properties grow in value. Yes, for the next 3 or 4 years, we might have zero to some growth. But as soon as interest rates go down, which is coming, interest rates going down, property prices are going to go up or through the roof because the rent is going up. So it'll be cheaper for people to own a family home. And also, I hear in the news people are getting mortgages, sell, or whatever, right? And recently, I met a young guy, 28 years old, and he said, I'm behind on my mortgage. And I said to him, well, how many hours do you work? He said, 40 hours a week. Okay. I said, why don't you work another 30 hours a week? Go and get a second job and do 70 hours a week. He's like, well, that's not how you live life. I'm like, no, that's what our ancestors did. And that's what I did when I got into property investing. I went out and I couldn't afford a painter. I couldn't afford a builder. So I used to do all the work on my property myself, and I'd work 80, 90 hours a week. And I said, you have to get a second job if you can't afford to pay a mortgage, because that's what your parents did. So for some reason, people have worked out that, oh, if we work 40 hours a week, we can't pay our mortgage. Well, too bad. Well, no, you go and get a second job and you ride the wave. When you come up or when you come out on the other side, you'll be like, thank God I did those extra hours and saved my properties, because it's happened to me. It's happened to me and I've grown my portfolio. So chase your dream, chase the properties, and pay them off. So if you ever hear me talk about investment properties and bank loan, I always P&I my loan, principal and interest payment. The reason I like to pay off principal is because I don't want the banks to have control of me. That's why I like to pay principal off. And as you're paying principal down, you can refinance and use the equity to buy more properties. So anyway, so we have circa $54 million of property in our portfolio as of today. Right, and this is the kind of properties I buy, and I don't change my game rule, right? So I do cash flow investing, and this is the example of a property we bought in Rotorua. Purchase price $515. This was about 3 years ago we bought this, right on the top of the cycle, Renovation cost was $35,000. All up, it cost us $550. The valuation came back at $850. Our instant equity was $300,000, which I refinanced and used. So this is a front house, this is a back house, and this is a 1,000 square meter section. Now, in the front house also, there's a little unit which is rented separately. So all up, there's a lot of rent coming in. So we're getting $1,300 a week rent, $67,600 a year. After our operating expenses, we banked $56,000. Now we booked this interest at 4%. And we've got, at the moment, doing 41,000 cash flow positive, this property here. All that cash flow positive funds are going back in to reduce the debt level down as fast as we can. Now, here's an interesting thing. Medium density housing rules have come into Rotorua, which means we can demolish this property and build 5 or 6 units or maybe 10 units here and rent it out. I'm not going to do that because this is cash flow positive. I'm going to keep this property and keep it going. Maybe 10 years later, I'll look at doing something like that. But basically, over the next 10 to 15 years, the game plan is to pay this property off with its own cash flow. And I've got all my money out. So it's cost me nothing to buy this property. This is the beauty of investing in properties that are cash flow positive, big land, and basically cash flow positive means 3 or 4 different lots of rent coming in. Right? And there's no magic science to property investing. This is what I chase. I chase cash flow. Now, I'm going to show you something I did in 2010, one of my first properties. And the reason I want to show you this is to show you that I haven't changed my strategy. I bought a property for $320 in 2010. Renovation was $290. So renovating the front house and building a second dwelling at the back. All up cost new $290, including driveway and that. Total cost was $610. The projected market value came back at 1.6. I instantly got to use $990,000 of equity, which I did use, refinance and bought more houses. So at the moment, the property is actually rented for $1,500 a week. So I haven't updated my numbers. And my operating expense is about $7,500. My net yield is $54,000. Now, I've just paid this property off. It's been fully paid off. So I'm taking home $55,000 a year from this property. And all I'm doing is using this money to lower the debt on other properties. I'm paying them off faster because I don't need my passive income at the moment. I just want to pay off debt as fast as I can. And the beauty of paying off debt as fast as you can is the banks don't control you. So I like paying off debt. like I said, this is something I did in 2010, and this is something I do today. I chase these properties hard. And also you get instant equity to use, right? Now, these are my other land banking properties that we bought in Rotorua. We bought the front house, renovated the house, and then the back one came for sale. We bought the back one and renovated it as well. All rented at the moment. So you got front entrance to the front road and the back entrance. We can probably put 20 dwellings down here, right? You come through one road and you exit through the other one. So we're going to look at doing that a long term, but currently it's rented. We're getting about, between the two properties, we're getting about $1,500 a week, or just over $1,500 a week rent. Now, these two sites here in Rotorua, it's cost us about $1 million with two houses on it. I can't build houses. I can't even build one of those houses for $500,000. You know, so I can't believe how cheap properties are still in Rotorua. And this is why I normally say to investors, you either go in the regions. Now the rent in the regions are literally nearly as high as Auckland, or in some cases more than Auckland. And here's another property we bought in Rotorua. So there's two dwellings here. So I got two rents coming through that and that one there. The rent we're getting on this is about $2,000 a week on this property here. And we own the sections next door to each other. Again, the game plan is to develop these sites as long-term properties, as long-term hold properties. That's our game plan here. And we're hoping that we can buy the neighbors' properties as well, so we can do more houses long term. But for now, I don't need to demolish these houses because they're cash flow positive. I'll enjoy the cash flow positive. I'll pay off the debt and all of that, pay it down as fast as I can, and I'll probably keep buying more and more properties until I'm ready to develop. I'm not ready to develop at the moment because I'm developing properties in Auckland. So this is a property we bought in March 2023, again, recently. We paid $480 for it, so there's a front unit and a rear unit. Renovation was $50,000. Our total cost was $530. It's two dwellings and it's a subdividable site, so it's rented to social housing for $900 per week. Not bad. So something that cost you $530, you're getting $900 per week. Again, it's a cash flow positive property. We're using the cash flow to pay off the debt, right? And the reason I'm showing you that is because I want you to know that we haven't come off our plan on how we do things. Here's a development property that we've just completed at the start of the year. This is build to hold. So we built 4 houses. It's the land and subdivision cost was 1.5 million. The building cost to build the houses was 1.5 million. Our total cost was 3 million. Our market value came back between 4.6 to 4.8 million, and we gained equity of between 1 to 1.3 million dollars. That's not bad to bank $1.3 million of equity, because to earn 1.3 million, I've got to earn 2.6 million, pay GST, income tax to end up with 1.3 million in my hand. So I decided to hold it. It's currently rented for $4,800 a week. So again, all the properties we buy are rented to social housing providers. We've been working with social housing providers for the last 14 years. And so all our properties are rented to social housing providers. Here's another site that we're working on currently. So we're just about to start the foundation. This we're building in Te Aroha South, and this here is obviously we're going to rent this house, all these houses. So we're building 8 units here. We bought the land for 1.35, and we came with the resource consent and building consent for 1.35. Our development and build cost is about 2.05 million. Our total cost is 3.4 million. Our market value is 5.7 million. We're going to bank $2.3 million equity, right? So you can imagine this. When we're banking $2.3 million equity, we're banking literally a $4.6 million payday, right? Because we've received 4.6 million, paid half to IRD, we kept $2.3 million. So this is the beauty of buying properties, adding value to it, extracting equity out. Now, I'm not saying you go and do it at this level. You could do it 1 into 2. You know, things that I was showing you earlier that I started when I started in 2010. Now, this is another site that I'm currently working on, RC and BC. This is our site. So it's an apartment zoning site. It's in Glen Eden. It's right next to the train station. So this is the train station here. And basically we own all this property here, about 1,800 meters squared of site. We are looking at building 90 apartments here, 10 commercial units and 60 car parks. So this is what our design here looks like. We've paid 2.4 million for the land, which is about 10 years ago we bought this land. So 2.4 million for the land and the consent, which is your RC, right? Once we get our RC out, or resource consent out, the value of the land will come back at $8 million. So we instantly make a $5.6 million equity on this particular land, right? Because now we've got a site that's got a RC and BC to build 90 apartments. So to make $5.6 million, that's a lot of money. Now that's a lot of money for me, right? I chase this kind of stuff. Now, it doesn't mean that I chase bigger numbers. I also chase smaller numbers as well, like trading, making 100 grand here and there. I like that kind of stuff as well because I consider that to be play money. But I want to show you what we are doing, right? I don't expect you to go out and do this, but you have to be in the game. You have to understand property investing because property investing provides you wealth and intergenerational wealth as well. Like, things like cost of living crisis. I don't need to worry about those things in my life because I've basically done the hard yard, took all the stress, built all this portfolio. Now I'm just building it to get bigger and bigger and bigger again. But apart from that, I can now pass the wealth down to the kids, to the grandkids, and the same with all my mates that we do properties together with. So you've basically had me, you've had Maggie, and you go, shit, this is confusing, which obviously I don't disagree, because property investing can be quite confusing. And Maggie here will show you a little bit of road path, Maggie. What's happening here?
Yeah. So as Salisha was talking about at the beginning of the presentation, that it's important to know where you are now financially, and also to understand, figure out where you'd like to be. And it's that difference between where you are and where you want to be that then allows you to make a game plan in between. So GRA has a product called Wealth Suite, which is really great for working out the first 2 points. Then before you rush out and buy anything, it's really important to get the right knowledge. And for that, we offer Property School and Development School. And then you need to establish what a appropriate strategy for your situation is, so we can advise you with strategy. Then we set up the structures that you use to buy property in, so with a focus on protecting your assets and tax planning, so that everything works efficiently and correctly. Through Property School, you'd meet the loan brokers that Salish and ourselves and their mates all use to help arrange finance. And then it's only at that point that you're ready to purchase a property. And of course, we're here to help you if you need help selecting the property or doing due diligence or figuring out how to improve it. So Property School, it's an enormous amount of content. A lot of the core modules are taught by Matthew himself, so Matthew Gilligan, the managing director. And you learn basically all the theory about how to invest successfully. It stops you, or the knowledge there will help you prevent buying dud properties, ones that say have insufficient cash flow or other issues that are costly and that would see you lose money. So we're sharing all the combined knowledge between all the people who are investing at GRA with years and years of experience, and that produces a huge amount of content that's very valuable for you. And you also get to try out Wealth Suite for 7 weeks during the course. So, as I say, Property School, it's online, it's available on demand. You have access for 12 months, so you can go at your own pace and repeat it as often as you like. For 7 weeks, you'll be able to try out GRA's Wealth Suite. You've seen a lot of the examples of Wealth Suite as we've shown you the numbers on the properties. So those are outputs from Wealth Suite when you pop your numbers in, and it helps you analyse any individual deals that you're looking at. If you have any questions during Property School, there's options there to submit them, and they'll come through to us, and then they'll be answered by the most appropriate person at GRA. So if it's a tax question, it'll go to a tax expert. If it's something about due diligence, it'll probably come to me, and we'll refer you on if it's a question that requires a planning expert, for example.
Yeah.
If you're new to GRA, you are eligible for a free initial meeting, and that'll be with a tax consultant. And normally, Property School is $5.95, but for anybody that signs up after seeing this event, we reduce it to $4.95, and just make sure that you sign up through that PS-offer URL that's shown on the screen there.
And if you do pay that extra $100, we'll credit that out. And what I want to just make it clear here is that we don't make money from Property School. It's something that we promote because we like to promote property education, right? We want our clients to become smart. So 95% of my clients are multimillionaires, right? And I started working with them like Maggie and Then over the last few years. So I started working with them for the last 17 years, right? And all these investors that I sit with every day, like I said, 95% of them are multimillionaires, right? We are all still humble. We always look at where we started from and where we got to, right? So this is why we share this knowledge. So this property school has hundreds and hundreds of hours of information. You got to remember, hundreds and 100 years of experience as well put in place as well. So you got to remember, like, you got Maggie, you got Then, you got me, you got Matt, you got the financiers, and you got the insurance guys. So all these guys together, they form your investing strategy. That's your supply chain, right? So when you do property school, you get access to all these people that we use for our daily property investing. Now, again, this is not designed to make money. It's designed to just give you a free, basically a supply chain for to access to all these people as well. That's taken us so many years to create. And also, if Maggie, what did you spend on property coaching and things like that?
35,000 when they started off.
And then after that, you came to property school as well, didn't you?
Yes, plus 500 for property school.
Yeah. Well, Then's got low IQ. So, Then, do you want to tell us what did you spend on property?
I've spent about close to $100,000 in property education, from, starting in 2015. But, for me, it's, the growth doesn't stop. It's just, there's always something to learn. We're starting from, renovation, now getting involved with, subdivision and development. So, you can't put a dollar value on something because one of these projects can go make you broke if you don't know how to do it right.
That's why we send you to training twice. We just wanted to double check, make sure you knew what you're doing.
Yeah.
So you can see that's between Maggie and Then, they've spent 135,000 on property education. What we're offering in property school is extremely informative. Maggie, what did you compare that to a $35,000 course, like, from your experience?
Oh, the information, the detail in property school was fantastic. It filled in a lot of knowledge gaps for me and provided just a much deeper level of understanding that really then gave us confidence to go out and do it ourselves without the expense of hand holding.
Yeah. Well, I had to give property school for free to Then 3 times. So he was up to speed. So Maggie, do you want to tell us about this property development school?
Yeah, absolutely. Now, I just want to jump back to a point on the previous slide that we are going to run a live online property school later on this year. So if you sign up for the recorded version that's currently available, we'll also give you access to the live up-to-date version once that's being run later on this year, because there are elements of the content that do fall out of date. So obviously interest rates change, the borrowing environment changes, legislation might change. So we're due for an update this year. Development school really is focused just on development, but development that's geared towards property investors building a portfolio. So whilst we might touch on an apartment building like the example that Celeste showed you, it is really focused on ordinary investors building up individual or terrace type style dwellings and building up their portfolios through that. It's extremely detailed, and there's a lot of expert presenters that come in to development school, such as a quantity surveyor, development borrowing brokers that are expert in financing development, which is a little bit different to just ordinary rental properties, experienced developers, a lot of content that's presented and taught by Matthew as well, builders, really sort of every expert that you need for development we've got involved that's either presenting themselves or provided information. It's very detailed. So anybody that is interested in building up their own portfolio by including some development, it's great value.
Again, just coming back to that, we suggest you do property school before you do property development to
Mm.
make sure you understand the terminology and the people that are talking. Otherwise, it's just too hard if you went and did property development. You'll probably struggle with it.
Mm.
Um, so guys, we've showed you what we do and what are we planning to do going forward. And here's some of my recommendations. Obviously, this is my opinion. I just want to make it clear. So some of my recommendation is don't do nothing. Act sooner than later. Every investor you talk to, they go, I wish I started investing 10 years prior to when I started. Every investor will tell you that. So obviously, if you are not into property investing or you are started and you haven't been doing much, get into it. Chase cash flow positive. I reckon the way to go forward is cash flow positive investing. That's the only thing I chase now is cash flow positive investing, or basically a large site with 2 or 3 dwellings. Don't use lack of time or fear as an excuse, right? If you just check your phone now, everyone open your phone and check it. What's your screen time? How much surfing you've done on social media and all of that, right? And whatever Then does, and all of that. So they just don't use time as an excuse or fear as an excuse, right? Surround yourself with the right people. That's so important because that's if you are surrounding yourself with people who don't believe in properties, you will struggle. Draw yourself a timeline with targets. So when I was 26, I thought to myself, at 36, I want to own 10 properties paid off, right? That's what I want to own at 36. And then while I was writing this timeline, I go, well, why can't I own these 10 properties now? It was just a mindset game. And that's when I changed, and I did it in this office here. And I still remember writing that plan. So I drew it up, and basically going, I'm 26 at 36. When I'm going to be old, I'm going to have 10 properties, right? Now I can tell you, when I was 26, I became then I turned 33. At 33, on that day I counted, I had 33 properties in the portfolio. Right. So what it does, it's just a mindset game. Draw yourself a timeline. Sit down with with your missus or with your husband and draw up timelines. That's what you need to do. And also think of long term when it comes to property investing. If you're thinking that you're going to become a multimillionaire by investing 2 years in properties, well, you can, but it's very rare. I've seen a client buy a property for $3 million and sold it 3 years later for $16 million. Don't worry, he had to pay tax because the Herald had to advertise that how a person bought a $3 million property, sold it for $60 million. So it was all over the news. So it's happened, right? It's happened, but it doesn't happen all the time, right? So property investing is long-term hold game. The longer you hold it for, the more cash flow positive you are, and you'll do better. Now, one of the other things I just want to tell you is don't go and resign from work and become a full-time property investor. You need cash flow to pay your bills. Like I put all my cash flow that's coming out of my property investing into loan reduction. But what I earn as an accountant, I go out and spend it and I reinvest as well. So I don't need to worry about savings because I run a working capital facility and I have all this cash sitting. So whatever I earn, it's all my money and I can do whatever I want. So here's a text message between a client and me. This particular client has actually become a good friend of mine as well. So when I met him, he was negative 1.5 million in 2010. And so basically you can see the text message from the client. I've been updating my Wealth Suite. Wealth Suite is a software we update your asset position and basically your statement of position and see where you're going to be. I'm sitting around $7 million just in property. What he means is 7 million equity. Big gains in the last 2 months, probably in the last 6 months. Yeah, that's me in blue coming in. Yeah, you should be over $10 million in net worth. Now, the reason I said 10 million, because I'm adding his business in there as well. Right. So remember, this guy was negative 1.5 million. Now I'm telling him he's $10 million in net worth. You have done well, mate. He goes, wow, yeah, maybe $10 million doesn't feel like it, but thanks, you've helped me a lot. So I appreciate that too, bro. Now I have helped him a lot. I guided him through the process, going from negative 1.5 to $10 million, right? And look at my last text message to him. I think it says sticking to the game plan, buy properties, pay off debt. I always tell people to pay off debts. Buy good assets, land bank, cash flow positive investing, right? This is my secret ingredient and I don't change from it. There's no rocket science to investing in properties. This is it. We chase properties like this, right? And this is what I've been doing. Now, funnily enough, I caught up with this guy last week He's on $18 million now. $18 million, it's climbing up to $18 million. And he's actually one of my business partners as well now. We do properties together. So you can see when you get the right people around you, they've got the mindset, they're happy to take the risk, and it's always a calculated risk you take, you come out doing well. Sorry, then we'll go to the next slide. Now, this is a really, really important site I'm on, guys, or slide I'm on. Now, I've said this so many times, and this was even before the Auckland flooding. We had flooding last night as well. Please get your insurance checked, right? If you've bought houses 10, 15 years ago for 400 grand, the houses are worth $2 million now. And if you've got 400 grand cover, I'll tell you this, if something happens to your house, touch wood, nothing happens, you'll get a 400 grand check from the insurance company. They'll tell you, see you later, right? So renew your insurance on your house. We use a company called initia.co.nz. Get in there, go and find the value of the house, get your house reinsured. It doesn't cost much more money, right? When I say reinsured, get it valued from 400 to 800 to replacement value, to whatever it is. Work out the replacement value and get your house reinsured. That's a very important investment. Now, on another matter as well, personal health insurance. This is really, really important. Now, I personally believe that health insurance is more important than life insurance, but sometimes you keep life insurance because if something happens to you, you want the family to be sorted. Now, I'm not a financial advisor, but what I'll tell everyone today is sort out your health insurance, right? Super important. Health insurance is very important because currently in NZ, there's basically no healthcare available, right? No one cares if you're sick, your kids are sick, or your grandparents are sick. None of that. No one cares at the moment because there's not enough facilities, right? So recently, I had a friend with a 2-year-old kid, and luckily, she was listening to me. She got health insurance put in place from day one, right? And poor little one had to go through cancer, and he's actually on the process of doing his last chemotherapy. But the parents were stressed out when they found out the little boy had cancer. The insurance company stepped in, provided all the specialist care and $50,000 as support money. Now, to have the insurance for this little boy here was only $600 a year. He's 2 years old, $1,200, right? And now the insurance companies probably spend good over $100,000 on him, which the parents would have had to spend if the parents were looking after the little one. And they got instant care as well. Now, 2 weeks ago, a friend of mine, he's right next to him, is basically his cousins live next to him. Their 15-year-old daughter got really sick, admitted into ICU, and she died, right? And they didn't have health cover insurance, right? And so I'm just telling you, health cover insurance is so important, right? You must have health cover insurance. So we use a company called riskdirect.co.nz, very helpful guy called Steve Monroe. So if you look him up and email him, he'll help you. He'll give you a VIP service. He'll really look after you and talk you through. Now, whatever he gives you, you don't have to follow it, right? It's your choice. If you want to use your insurance company, that's fine. But get him to have a look at it or second opinion. And if he doesn't understand it, he goes directly to the insurance company to get answers for you. So very important you look at getting your health insurance sorted, your life insurance sorted as well. So Maggie, do you want to tell us what this is?
Yeah, so GRA obviously puts out regular updates for anything that happens related to property investing. You can sign up to our newsletter on the GRA website or follow GRA on LinkedIn or Facebook, where they'll post blogs and articles on changes such as legislation or other things related to accounting and property investment in particular.
Perfect.
So our final wrap up.
Yep. So we're going to wrap up now, guys. So if you do want a free initial meeting with GRA, if you're a non-GRA client, so flick Amy an email. She'll organize you a free initial meeting. And also part of the initial meeting, you get to know about asset protection, tax planning, and any other advice we can give you. We'll give you that, and we provide accounting service as well. Like we said, Amy's details are there. Feel free to email her, and we're happy to guide you through the process. If you do want to complete our RFI form, which is on the side here, you can jump onto that website there and basically fill the form out, and Amy will get in touch with you as well. And if you do feel like buying one of Matt's books, we'll obviously can send you that across as well. But if you do fill out a RFI forms, you can have one of the books for free, because we like sharing information. So we'll make it nice and easy for you. So if you fill out the form, you can get a book for free, because again, it's informative. You know, you like it. And property school is $4.95. If you don't understand property investing, I suggest you do property school, and development school if you have done property school to understand developments. Again, be careful with developments. You know, it's not every man's game. You know, you can look at the hair that I've been losing. You know, I've been thinning out really fast, and luckily I've got Then on site. You know, tell us then.
I think I'm already graying out too. No, it's great. I mean, so I've run pretty much all of the developments that the guys are doing. So, dealing with council and also with engineers and builders. Yeah, just making sure things go smoothly. It's great fun because seeing a house there once and then getting demolished, and then from ground upwards you get 3 to 6 houses being built. And it's great to be part of that journey and to use Celestia's money.
Yeah, I tell you, it's actually painful. It's painful when I see weekly bills. I'll tell you this now. We got circa about 30 guys we're running at the moment, and so we got to pay everyone's wages and that. But hey, one of the things I've learned is actually we can cash flow it ourselves as well. So slow the projects down and cash flow it. I don't need the banks to tell us what to do, So that's the beauty of doing property investing with mates and things like that. Now, basically, we're going to wrap up now, but I think, well, guys, before we wrap up, I just want to make it clear that, I'm $500 an hour. Maggie is $250, Then is $250. You got $1,000 an hour of free resources here. So why don't you bombard us with some questions before we head off, and you get some free advice? So Maggie, is there any questions there?
Yes, we've got a few. Joshua asks, what about investing in locations outside of Auckland? Would you still consider looking at high cash flow properties 2 hours away from Auckland, close to Hamilton, Taupo and Rotorua?
Well, Rotorua is where I love investing at the moment. I'm quite hard into it. Hamilton's good, but I find Hamilton to be as expensive as Auckland now. So that's what annoys me a lot, because in Rotorua you can buy the same site for half the price, which is only 40 minutes up the road, and the rent in Rotorua is probably pretty much similar to Auckland and Hamilton. So I chase those kind of properties. Now, I know for fact, because I deal with a lot of social housing providers, right? So I know for fact that there's massive shortage of houses in Whangarei, Gisborne, Marston. Actually, Maggie, you're in Marston, so why don't you tell us what's happening there?
Well, I guess a shortage of social housing is not quite the same as a shortage of other rental properties. So if you wanted to be a social housing provider, there'd be demand for it pretty much everywhere, I'd say.
So
including
exactly, Marston has got a major shortage of housing at the moment, so I know because the social housing providers are telling me this. So yeah, anywhere out of Auckland, you could literally do well at the moment. Yeah.
How do you find the good deals?
Well, basically, my golden rule is to chase cash flow positive and land banking. So I can do negative investing because I can afford to, right? But I encourage people, and I encourage myself to do cash flow positive investing, because the last thing I want to do is people to come under pressure and feel like they need to top up mortgages and things like that. But again, there's some families there that can handle negative properties. There could be mum and dad, high income earners. So it's okay. They like to buy something more expensive. It's okay. But there's some mum and dad investors out there, probably like when Maggie, Then and I started, we were chasing cash flow positive because we couldn't afford negatives. So that's what we started with, chasing negatives, dual incomes, so two loss of incomes or 3 loss of income properties. That's what we were chasing.
Hi, Shailesh, do you call cash flow positive as the income related to the amount you invested in a property in the past, or related to the current value of the property?
Well, I base it on cost price. It's your cost price. That's what does it cost you. That's what investments are worked on. So if it's cost you $1 million, well, you work on $1 million. If it costs you 600 grand, you work on 600 grand. So it's your cost price.
Who do you use for property finding?
We've got a couple of guys there that we use for property finding that obviously are contracted directly to us. So we go out and find properties. And sometimes there's properties that I probably don't want to buy it because it's probably doesn't meet my criteria, but it meets the client's criteria. So we are always more than happy to pass it down to the client and see if they're interested in buying the property. Mm.
What would the cost be to get a portfolio assessment and next step regarding ideal purchase?
That would be someone like Matthew Gilligan or I having their meeting. We are
Mm.
500 plus GST an hour to obviously sit with you and just look at your portfolio. And it's quite an informative meeting, to be honest. Like we would sit there and tell you if we don't like something, we'll say, get rid of it. Or if we like something, we'll tell you we like it. You should hold on to that property. So it's
Mm.
quite good, you know. I mean, the other day, Than was looking at selling a property and he rang me and we had a detailed analysis and then I changed his view, you know. And it's just important, like, you know, sometimes you can't look at it from another angle. And so when you sit with someone like us, we just because we got no emotions, you know, we're not emotionally not involved in your portfolio, so we just tell you how it is.
Mm.
Mm,
Yeah, to give that impartial view. Mm.
exactly.
And it's good if you sell something that's not really not performing, it frees you up to buy something much better.
And if you don't want to listen to us, it's fine. You know, it doesn't matter. At least you've got a second opinion, you know?
Mm.
Yeah.
Linda asks how to rent her house to social housing. She's in Auckland.
Well, Linda, basically, if you do Google search social housing providers in whatever area you are, so if you're in South Auckland, go South Auckland social housing providers, Google them, you'll get a list of them. You give them a call and they'll sort you out.
Do you help with setting up a property flipping business?
Oh, yes, yes, we can help you set up a company. We can tidy it up. We can put all the systems in place and we can train you up in all the zero-rated stuff you need to be aware of. Yes, we can give you a hand with that.
I'm a 22-year-old graduate. Can I invest in property?
Well, yes, if you're 22-year-old and in good money, you can definitely invest in properties. There's no issues there at all. So property investing is based on your income. You got to remember you cannot invest in properties if you don't have income. And when you do invest in properties, do not give up your job because you still need your income to pay your normal bills while your property portfolio is getting built.
Rhett asks, what quick formula do you use to calculate gross and net yield when searching property?
So what I do is instantly I work out as $10,000 as my operating expenses. Now operating expenses means your rates, your insurance, and things like that, right? So I got 10,000 as my operating expenses. Then I go purchase price. Let's say in Rotorua is $500,000. I go, what rent can I get? Say they go 650 is the rent. I go 650 times 50 weeks. I get 32,500 divided by say 600 grand. And then I go, well, that's a 5.4% return. And then I, in my head, go, well, I'm not going to buy it for that because my interest cost is more, right? So I'm going to try and buy this property for basically about 400, 410 or 420. Now, the only reason that I would buy this property at 5% return could be because it's got a massive land that I'm happy to pay extra 100 grand to buy this piece of land. Yeah, that's when I'll
Yeah,
pay
because you
extra
can
for it.
go back later and add more dwellings.
Correct. But that's how my quick calculations will work in my head. Yeah.
How do you know if you should build new, buy an existing, flip, or buy and hold?
Well, basically, for you to do that, you need to obviously have a meeting with Maggie or Than first, and then they'll review the site with you and work out what you need to do. Be careful with, building new or buying existing flip or buying a land where you're going to demolish and build. You got to make sure you do your proper DD before you do that, and it's super important you actually get that done.
And a good preliminary step is to talk to a loan broker. So recommend Chris Peterson Mortgages and establish what your borrowing capacity is, because
Yeah.
that will determine what strategies are available to you.
Exactly.
Do you help find property deals for clients?
Yeah, we can help that, find property deals. So I suggest you make a time with probably Than or Maggie, and you sit and you write down your list of requirements. And what we do is when we go through properties, we don't like, we're happy to pass it on. And we probably last year passed about 10, 15 properties to client base, and they've ended up buying it. So we don't, it's not like we're buying everything we see. There'd be a reason why I'm not buying it. So last week, a property, someone I know have bought a property from us, which I had it under contract at 550. I said to him, if I was going to buy this, I'll pay 450. No, they were like happy to pay another 100 grand. So they paid extra 100 grand to buy it.
Can I invest in property with a $70,000 salary?
Yep, it all depends how much deposit you have, how much cash you have, and what you're looking at buying, you know. So if you earn $70,000 a year, you know, sounds like you are a graduate or coming up in a role. I suggest you probably tee up with a friend who is earning similar money to you or higher, so the two of you are more bankable together. And that's something I did in my earlier years in property investing. I was trying to get together with people with incomes similar or higher, so we could invest together, because I couldn't buy everything I bought alone. Yeah.
Right, we're all done.
Fantastic. Well, guys, thank you for listening to us. And like I said, if you need any of our any of our help with anything, feel free to get hold of Amy. Amy will organize a meeting time, and we can definitely help you with, you know, with anything to do with property investing and accounting. Right. Again, if you're insolvent or, you know, your business is in trouble, happy to help you with that. If you need to help with do property investing, we're happy to help you with that. Remember, don't forget, every 10 years goes past, you go, I wish I did it 10 years ago. Right? Get in there now and get it started. Get the right people to surround you. And it could be the first 20 properties you find that then Maggie and I will say no. And then you find the right property and we'll go, yes, you should buy that. Yeah. Yeah. Fantastic. Any other questions, or are we good to go?
We're good to go.
Okay. Good night, everyone. Thank you.
Thank you.
Good night.